guys, let's go. June 6, 2019. It's Thursday. 13 Market Moves Daily. Guys, I got to tell you, this is one of these boring days. I absolutely hate when the market environment is like this. Why? Because there's a high probability that we're going to go into a move 5 type of environment where VIX continues to slide and the intraday moves, they're just not as big. So before we dive into all the details for today, keep in mind, number one, it's a good idea not to trade or trade extremely lightly. And if you are trading, only buy options in the money or near the money. Do not go and buy a ton of stuff out of the money because it will produce some major losses on a day 5 or move 5 type market environment. So, number one observation from yesterday, the bounce was pausing in major stocks. Like certainly could, Amazon go all the way above 1750 yesterday? It could have, but it didn't. And the fact that some of the good stocks like that are pausing on the bounce, we're going to glance at the chart of Amazon in just a second, it's right against that orange line. However, majority of the stocks are bouncing a little bit better than that, and that's why predominantly the major indexes are like the S&P 500 is definitely above the orange line solidly now. NASDAQ is just a bit above. And with that said, however, they really are against some major levels here, so a reversal could come. However, as we mentioned yesterday, the main thing yesterday was the markets are building out the shoulder, and we're going to have a little bit of the sideways pattern in a smaller trading range. So therefore, we don't want to calculate any huge moves in either direction on a day like today. So, and here's why this is probably happening. If some of you are looking for a little bit more of an explanation, well, the market is calculating the probability of a rate cut. And the question is whether it's actually going to take place on June 19th, in July, or September. If there is going to be no rate cut in June or July, our summer tech crash is going to be completely off pause, and we're definitely going to resume the drop. If, however, on June 19th, just put it on the calendar, guys, that's going to be a very important day. Okay? June 19th could be crucial. And this is where we could see some substantial moves in the markets. Now, we're just a couple of weeks, actually under 2 weeks in relation to that date. But until then, we could see the markets go back in this environment where they're not making this few 100-point moves in a day. They're just making some smaller moves. And that is going back again to building out the shoulder. Once the shoulder is built out, I think we're heading for a much bigger drop. But with that being said, be very careful today. One of the key observations yesterday was said, look, do not go and build big positions. So for those of you guys that are new, and maybe you're looking at some things in the chat room, you're like, oh, well, he's doing something with workday puts, CRM. Guys, it's important to target your entries and levels because that's what's going to determine the amount of your winnings or your losses. So for those of you, let's say, jumped on the Tiffany trade, ticker TIF, yesterday, right, when you saw it right before the market opened, the stock dropped like over $3 within 2 seconds. That was a 300% return. For those of you that were getting on the same trade 5 minutes later, okay, it was a disaster because by the end of the day, the stock bounced. It's still a great short against these levels, 91, 92. If you guys stay look at the chart, Tiffany is still a great short here. However, because of the market conditions that we're witnessing right now, and overall smaller size moves, that trade may take longer time to materialize. So instead of buying, let's say, this week puts, it would make sense, or if you do own Tiffany, this week puts make sense to roll them out to the following week. That will actually give you a much higher probability of locking in some solid gains. For those of you that don't understand what stair step is, guys, let's say you want to buy 6 contracts of a particular stock option. Don't buy all 6. What you do first is you buy 2, and then you watch it for a while, and then you watch the markets. And ideally what you want to do is very simple. You want to identify the trading tunnel range, and you want to add on the short side at the higher end of the tunnel. You want to collect your gains at the lower trading part of the tunnel. And if you do that throughout the day, that's day trading. Sometimes we don't want to day trade, but when markets make smaller moves, it is wise, because you could be sitting there like yesterday. Probably many of you were sitting there thinking like, geez, man, the market is dropping all of a sudden right at the open. And, you know, I've talked to a couple of you, and you guys, look, we said lock in gains on Amazon at $27.50. It opens up, you know, I'm sorry, at $17.50. It opens up at $17.52, and then I talked to some of you later in the day. You're like, oh man, I didn't close Amazon in the morning. Why didn't you? You could have collected a healthy gain. Okay, we've talked about locking half of the positions. So guys, be very careful, be very focused in this market, and especially when it's making the smaller size moves. So we're going to take a look at a few charts. Hopefully they'll be helpful towards your execution of some of these trades. But the idea is this: just keep this as the main focus and write it down somewhere. You short stocks at the higher end of the trading range. You cover these shorts, or you close out these put positions when we hit the lower trading range, which we indicated in the trading tunnel yesterday was 28.05. We actually went a little bit below that, right? But we clearly stated in yesterday's video that, hey, when you get to the 28.05 level, what do? Okay, you collect profits. So get in the habit of collecting profits on days when we're kind of in the middle of this trading range, because that's going to be your best strategy. When we're breaking to the upside or the downside, then it makes sense to actually stay with the swing trade. So with that said, guys, we're expecting to move 5 today. However, we're not discounting the probability based on our June 9th and 12th, 2017 historic analogy that we could slightly go up higher today before reversal. So we're going to be zoomed in, focusing specifically on a time frame of 10-15. That would be the time, if we do get a reversal today, like in a move 2 type reversal, that would be the time frame which will and should be taking place. Now, with that said, different size moves too, they have different magnitudes. So with that said, we could be experiencing a move 2 today, but the size of the move 2, you know, it may not be grand. It may not be like, you know, 30 points down on the S&P. It may be just 10 or 15 points. So that's important to keep in mind as you guys are trading today. Now, of course, if this analogy perfectly works out and lines up today, not only do we get a lower day today, regardless of whether a 10 or 15 point drop, we'll also get a lower day tomorrow. And we're going to look at all kinds of probabilities and what to do with it in just a second. There's not a whole lot of cool earnings this morning, guys, but after hours, look, we made money on this thing, guys, on the call side, on the put side. That's certainly something I'll be watching after hours, BYND, and it's going to make a big move. Okay, so get ready. Make sure, trade with light positions today. Get ready for tomorrow, because when BYND is going to open up, guys, there's going to be some cool opportunities to trade this thing. And based on certain behavioral observations, we're going to be able to actually lay the trade out tomorrow pre-market. So just make sure you have some money in reserves to be taking advantage of that trade there. Let's review real quick, where do we stand on S&P 500? So yesterday, we indicated, hey, strong move above the orange line. Here it is. This is what happened yesterday, okay? Second move higher, not as big of a move. So it's kind of like almost against this gap down, not quite there, right? But pre-market looks like we're no longer at 28.26. It defied the odds. Looked like we had that move 6 behavior going into the close, and then it reversed. And then it reversed again lower after the Mexican, you know, situation on the trade and stuff like that. But the market kind of shook it off. And so we're overall moving closer to these gap down formation to a level about 28.35, 28.36 at the time I'm recording this. So just keep in mind, we are against this major level, which actually makes sense to come in and buy puts. So when we're talking about accumulating, let's say 6 puts of something, instead of buying and jumping at all of them, and that was the whole purpose of video yesterday, guys, is to explain to you that you really want to stair step. So the question we asked, when do you want to buy puts? Well, the answer was yesterday and today and tomorrow. Okay, depending on which levels we're targeting. So instead of buying all 6 at once, you could have bought 2 yesterday, got in at what appears to be a much better level today, right, with 2 more. And at that point, if we get a reversal like in a move 2, you can add 2 more, and you would be good with 6. But overall, that trade at that point would have been making you money. But if you jumped all in yesterday with 6 puts, then clearly you don't have the opportunity to add more unless, you know, you're ready and prepared to increase your overall position size. So when you trade, just make a decision of how many puts are you wanting to buy and make sure you don't buy all of them at once. So for some of you, you know, that I work with in the High Rollers Club, I mean, you know, we buy 200-300 puts at a time, you know, but you guys know we don't buy all of them at once. We'll go buy 50 and then we'll add 100, we'll add another 100, you know, so for everybody's going to be a different amount, guys, but just remember, you know, don't try to buy all of them at once. So if your typical trade size is 10, buy 3, add 4, add another 3, at different time frames of the day once we have a clear understanding, specifically what move has a high probability of happening today and the next day. Okay, with that said, so we're above the orange on S&P 500, second day in a row, but facing resistance. We were against the orange yesterday on NASDAQ, and on June 6, today's June 6, yesterday, June 5, we finally breached that level on the way high. And looks like we're facing that gap. So we're going to face some resistance in key indexes today. That's why we don't believe the market's got enough energy and willpower to keep moving forward from here. And if we look at our historic analogy with the June 9th and 12th, we're really on that day 3 where we initially moving higher, but it will result in us moving lower at some point in the day. And if that does take place, it gives us a very high probability of actually moving lower tomorrow. Now, above the orange line on NASDAQ for the first day, but against major resistance level. Amazon, same thing. This is what happens to Amazon yesterday. It does make and squeeze an overall positive move. This is not a bearish black candle, guys. This is actually a bullish black candle, but it stops at this level. And it's reasonable to expect that on a day we could actually make a substantial move. Yesterday, because it was lagging the day before, it actually fails to do so. So we're not expecting huge upside on Amazon, but we're expecting to maybe go against the level 750 at some point today, then reverse. So it is right at and against this orange line, and at the same time, it's not very far at all from this main level where this last gap down was created. So the probability of it breaking substantially higher is not good, but giving up some of the gains over the last couple of days is much more reasonable. So going back to our historic analogy, okay, so these were the dots, these were behavioral observations we made on the volume to kind of build the case as far as the context concerned, going back 2 years ago. And so this is where we are today. Where we are today, we're opening slightly higher. But it doesn't mean that we're going to close higher. As a matter of fact, facing these key resistance levels, we're likely to go lower. But it is not reasonable to assume that we're going to drop by like a ton. So don't expect a crash. That's why it does not make sense to buy puts out of the money. But it does make sense to buy them at these key resistance levels. So here's your situation with NASDAQ, same thing. It looks like we're going to open higher, but doesn't mean that we're going to finish higher for the day. That's why we're calculating this move to type reversal. Key time frame to target is about 10:15. It could start taking place at 10, you know, between 10 and 10:30. So like look out, basically 10:15. If we do get this, then definitely add puts at 10:15 because it gives you a higher probability. And the question is, well, what expiration do you buy? Well, if we get a reversal at 10:15 in a move 2 formation, then you want to buy puts that expire tomorrow because based on this historic analogy that we've been studying the last few days, it tells us that tomorrow we're likely to have this, which is a gap down and a further drop. Now notice this drop is not like a crash. It's not like circumstance here. It's just going to be another drop. So let's consider we drop 10, 12 points today. Could drop another 20, 30 possible points tomorrow. But it's still not going to hit the lows that we set a couple of days ago when we were at 27.31. So that's basically what we're targeting. And, you know, some other stocks are just not healthy to react in, mostly all your growth technology stocks. But here's the basics. I want to make sure I put this slide in here and make sure everybody understands this. So the basics are such. So the yellow line will represent here the upper range of the trading tunnel. the red line will represent the lower range of the trading tunnel. So when we go against these levels of resistance, right, you want to short, you want to buy puts as close to this upper trading range. And the reason we're calling it a range because it's not going to be like a precise point. Oh, we'll just make sure if we hit, 28.41 and a quarter. I mean, that's the only way you start. No, you should start buying, but don't buy a huge position, right? So, yesterday I've added some to the put positions, like on Amazon, when it was trading around, like 1730, 1735 level. Then it had a pretty quick drop, but then it bounced towards the end of the day. So what you do is, when you notice the stock hesitates to move lower, you lighten up your position. You don't have to sell your whole position, but you can lighten up on like a few puts. And when it's back to that level against the resistance level, then you add some more. But you're continuously locking in some gains, basically trading around this core position, okay? And the idea of this here is that, once you're at the higher trading level range, okay, you don't know, you don't want to miss out on a great opportunity, because sometimes things get to this range and they reverse rather rapidly. So you don't want to wait till something's going to move higher another few points just to, you don't want to be basically greedy. You want to start accumulating your position in steps, in stair steps. So just use the stair step approach, and I promise you it's going to help you keep your costs in check. And when you're paying good prices for the options, then all of a sudden your job of becoming profitable becomes substantially easier. Okay, so just remember this, and now we're going to talk about specifics and how you can apply this today. So clearly yesterday, this was the range that we discussed in yesterday's video, 28.05, 28.42. We said short here, close profits on the put side right here. So what we got here, I think from talking to a few traders yesterday, they didn't close these positions when they were actually profitable. So, and you want to understand, okay, we're in an environment where we are in a tighter trading range. So you want to use this intraday drops to close the position, but you don't want to necessarily close everything, right? Because at times it's going to look like we're getting to some of these levels on lower volume, and all of a sudden this volume spike could come in and we could break the level. So you want to collect some gains once we're at that level, but you don't necessarily want to sell everything, okay, just in case there is going to be a break. But once you clearly see there is no break lower, like we stopped out yesterday at 28.01, you want to just get out. Get out, collect profits, and just watch the market. You don't necessarily have to play both sides of the equation. You don't have to be greedy playing the put side and the call side, and because it gets quite complicated, especially when the trading range is tight. So you just want to focus. When you get to these levels, you short. When you get to these levels right here, you collect profits. Short, collect profits. Short, collect profits. It's simple, guys, if you focus on this. Okay, so again, let's not forget May 26, 27, 28, 2019. This is what's taking place. Look at this level, 28.40, right? 5 times in a row. The market just can't seem to get itself above that. Why is it so important this morning? Because this is our expectations, and clearly there's no way I could have drawn this chart because this is not what's happening yet, but this is actually a picture of May 28th, and look at the levels, right? I highlighted these 3 dots, which basically the market establishes a triple top before it does this. Well, pre-market so far this morning, this is how everything looks. The market is just kind of going sideways at the level of about, 28.36, which is highly resembles this behavior pre-market on May 28th. Now, after that, we try to come close to this 28.40 3 times, and then we resume the drop. Now, the reason this picture is important, and guys, print it out, have it in front of you today, because it looked like we were going to break that level on the 20 on the move high, but then we just surrendered. But also notice the magnitude of the move, right? There's only 10 points to play with here. So 28.40, 28.30 is the lowest. In other words, nothing big is happening. And this is kind of what our expectations are for today. So ideally, we want to buy some puts right here at these levels, 28.40. And it could go to 28.41, 28.42. Our condition to cut losses is if we break above 28.46. So if we're getting in at 28.40, 28.42, and we're getting out at 28.46, there's no way anybody should have any major losses. I mean, unless you're putting the 100 grand of your trading account or something. I mean, if you steer step and you buy a couple of puts at 28.40, a couple of puts at, 28.42, and you have to cut the position at 28.46, you'll be fine. Okay, but also notice that you want to start taking some gains when we start hitting the level of maybe 28.30. So sell 2 there. If for whatever reason we're off on our calculations, the reason did a bigger move coming up, then, start cutting the second one at 28.26, 28.11, 28.05, boom. But overall, you're getting there, you're collecting the profits throughout the day. So just use that. It's actually quite simple, guys, but just keep this in mind. Nothing big. We're not expecting anything big. The market is in expectation of these rates, and possibly we could be in this lower VIX environment for a number of days as we're building out the shoulder. Now, here's the bigger picture. Here's actually a chart of a 10-day chart of S&P futures. And if you look today, so here's where we are so far pre-market at 28.36 as I'm recording this. Well, we're terribly close to this level. And I've shown you this level in detail, right? That's where the market was trying to break about this 28.40 multiple times, and it failed. So we're very, very close. The probability of us breaking that is just not as strong as the probability of reversing and possibly visiting 2800. Now, it doesn't mean we're going to revisit 2800 today, or 2805 specifically, right, is the area that we want to target. I mean, we can drop back to 2814, 2811. So just know to use the lower trading ranges of the day as exit opportunities to collect some profits. So basically, you're shorting here, getting out of the lower trading ranges. Guys, it's just basic stuff. Anybody can do this. Okay, the market move from yesterday was a move 7. And yeah, it was a very challenging day because the speed at which the market started reversing, we actually did go slightly in the negative, but just borderline, right? For those of you that are new to the market moves, guys, please make sure you go in, review the move 2, review the move 7 in a drop in VIX environment, meaning like when VIX have been continuously going higher and it reverses and it starts creating sort of a downtrend, but it's not clear. There's just not enough data to say whether it's a real downtrend that's going to be sustainable, if the VIX is still going to bounce. These moves are rather tricky. That is why I emphasized the main recommendation yesterday, and the same thing today, is trade smaller positions until you get a high probability sequence, until you get a high probability day. So if you stick to those rules, you will do substantially better. So move 7, it appears like the market is reversing. It appears like it's a move 2, where everything's just going to go to hell again and we're going to crash. But what do? They come in and they buy the dip. And this is exactly what you see here in the chart. So we get up higher. Here's that reversal that comes out. Here was the perfect day, the perfect time of the day, right at 9:30 to sell your call positions. Boom. And then this reversal is coming so fast, it's making a lot of traders think, oh, no, we're going lower. Looks like, oh, no, we're going lower. Okay, but what do? They come in to buy the dip once. They come in to buy the dip twice. Finally, we're getting that reversal rather fast. Looks like a move 6 type behavior, and they even buy this dip number 3. So that's your 7. Your 7 move is buying the dip type move. So this is a perfect example of a move 7. Basically, you get up higher, you open higher, you pull back. It appears like a move 2. They come in, they buy the dip once, buy the dip twice, buy the dip 3 times in a row. Boom. Very bullish move overall. So 2-day sequence is 1-7. We've talked about it, right? When we notice this behavior of 13, we're saying there's a higher probability of a couple of consecutive days higher. So there you go. Now we have this sequence of a 1-7 on a 2-day sequence. And this is how it looks right here on the chart. Pretty clear. A 5-day sequence is 11-3, 12-1-7. So this is basically telling us, yeah, it looks like the bulls are taking over the market. But don't be fooled by this, right? Because our historic analogy is telling us that today could be the last day higher, which kind of is going to complete this sequence, 12-1-7. Again, in a lot of these type of scenarios, 1 is your most bullish move. Your 7 is there's still some sellers coming in intraday, but overall there's more buyers coming in and buying the dips. So you go from the most bullish move, which is 1, to a less bullish move, which is a 7. That puts us on a higher probability for a move 5, especially when we're observing that the VIX potentially could be trading under 16 or at least dip under 16. And if it remains there, don't expect big moves in the market. So we could have an easy move 5. You guys know on a move 5, I personally like to go fishing. But because there's a few things that are happening with the market, I'm not going to go fishing yet. I'm just going to wait till 10:15. And I'm going to see if we are potentially getting the reversal based on our historic analogy. So that could definitely change things around because that sets us for a very highly profitable day tomorrow. But so far, I think we're going to complete the sequence. The highest probability today is 12-1-7, finished out by 5, and a possible, reversal tomorrow. So this is how it looks on a 5-day sequence. So these were your couple of bearish days, followed by this reverse head and shoulders, which we identified correctly, followed by 2 bullish move and a less of a bullish move, which is very difficult to trade because of the lower trading range today. Again, focus on these areas on a 10-day chart, right? This is your 10-day sequence. After multiple consecutive moves, bearish moves, we finally hit this situation of a reverse head and shoulders, now followed by a few bullish moves. And just as most of the individual investors, they're starting to forget, hold on, we were just crashing a few days ago. They may not be observing these levels right here, which creates a great opportunity to come in and actually buy some puts at the higher trading range. Okay, this is what was said yesterday, right? So we're basically saying, well, hold on. This is how the market's probably going to look over the course of the next few days. And this is exactly what happened. Basically, we went higher. There was that pullback, kind of going sideways. But notice, we're getting closer to the drop-off. So if you want to think of this, it's kind of like a flowing river and, like a mountain river. And overall, it's just moving downwards. We're still heading downwards. It may not appear so because of a couple of bullish days. But notice, the magnitude of these bullish moves, it's pretty static. There's nothing crazy going on this bullish side. So we may get just another day or two like this before we're going to reach the waterfall. This would be the waterfall. And this is where things get really fun. And this is where you guys make a bunch of money. Okay, expecting VIX to retest 19 by Monday. Yes, if we are heading to a waterfall in the next 48 hours, it would be reasonable to expect VIX could reach 19. But so far, yesterday was the 3rd day down for the VIX. It opened up 16.7, reached a high of 17.48. Finished at 16.06, still above 16. But clearly, what we want to see today would be a definite sign if we are heading to 19 by Monday on the VIX. If VIX would actually break below 16, like high speed, and bounces out of above 16, ideally 16.5, 17 by the end of the day, that would be a good indication that we're heading to 19. So VIX uptrend in jeopardy, yes, because what we definitely don't want the market to do is break the 16 on the VIX and stay on the 16 because that creates poor trading conditions. Next market move, guys, we would love for it to be a 2. However, there's a reason why I got 5 in orange here because that is the highest probability for a trading move today, which clearly we either don't want to trade that or want to trade very small positions. We want to be very precise and accurate on our entries. There is a same probability of a move 7, which is smaller magnitude move, right? Maybe a few points higher, pullback. They buy the dip again. So we're expecting one of these milder, softer days without any crazy drops. Move 11 is in the cards too, but overall, we're mainly focusing on this move 5. We don't want to trade a whole lot today. Key takeaways, guys. Trade light. Do not buy options out of the money. Wait till 10:15 or better until tomorrow morning to trade heavily. Beware. Watch out for move 5. Watch out if VIX drops below 16s and stays there. Or if it actually bounces above 16, 16.5 by 4 p.m. because that will really tell us that we are 100% correct on our historic analogy and tomorrow could be a very nice payday. With that said, guys, stay disciplined, stair-step into the trade, pay attention to the key levels, and make it the best day by not trading a whole lot and saving your focus and energy for tomorrow and Monday. I'll see you guys in the next video.